Good morning, traders. It is Tuesday, September 29th. Taking a look at the charts, we got the SP 500. Equities trading relatively flat, slightly negative. All the indexes are down just a fraction of a percent. Bonds are trading slightly higher this morning, and metals are trading higher as well. If we take a look at yesterday's price action, this is the SPY. You can see here, more or less, we are under the 20 and the 50-day moving average, which 50-day moving average, the pink line, is the 20-day. And when we're below that, the market has a little bit of a negative bias. That means the momentum is down long enough that this upward momentum is shifted. The last time we got under that, you can see how the market crashed. This was obviously COVID induced move, and we're starting to see COVID come back, and now we're stuck up under this resistance area. The fact that it gapped higher yesterday, gapped to the 50-day and more or less the 20-day, that's generally not an ideal sign. You don't want to see price gap into resistance because gaps tend to get filled. We are in a downtrend, so it could be an exhaustion kind of bounce type gap. But we need to keep aware that this pattern may actually be very similar to what we saw back over here in 2018, where the market has an A, B, C correction, which is what we just had over here, an A, B, C correction. And then you see this real strong, there's a big gap up, and then there was another gap up to come up and test these highs. And then it sold back down and then rallied back up with some more gaps up here, some island tops. And then it went for a full out measured move, a flush to the downside. So we could get into that with this market having a big gap up. Yesterday, it could come all the way up and test this high. We might see it chatter here, and then we could go into a flush out with elections coming up over the next month and change here. So there's going to be a pretty wild market. We really need to see how this market is going to react at this 50-day and really these previous highs right over here, this bounce to the upside. Now, if we were to take a look at some current cycle analysis, so more or less the thick blue line is a blend of the the cycles, and they're detrended to give you an idea of the bias of the market. Typically when a cycle is moving up, especially the blue one, it's a longer term cycle, a blend of longer term cycles, the market should be moving up. When it's moving down, we should see the market with a downward bias. Doesn't mean it's going to follow the blue line, it just means when it is trending up, we should expect buyers to be supporting price. You can see right here we are still in a downward bias and still really for a couple more weeks. If we were to go back over here in time, you can see how this market had this A, B, C correction, the one I just showed you on the SPY chart. And then we could see there was a bounce, a consolidation, it continued to go lower. And that's what we could be getting into. If we were to just zoom in on this chart a little bit, we can see our shorter term yellow cycle shows a bounce. We're getting a bounce up. We have another 2 sessions before potentially it tops out the short term cycles. And then we could come all the way back down and chatter in this big range. We still have this longer term blend of cycles pulling down for another more or less 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We're looking really at another 2, potentially 3 weeks for the market to try and put in a bottom, maybe a little less. These longer term cycles typically kind of bottom out just after the market does. You can notice bottoms are a few days before an actual bottom in the market. So we're going to keep our eyes on this, but if we just zoom out and take a look at that previous price action and to see where we are here, you can see we've got this sell-off, this potential bounce and chop and sell-off, very similar to what we saw over here, a sell-off, a bounce, and then continuation flush out. And that would make sense going into elections with uncertainty. Everyone starts to sell off. Big players move to cash to protect their position, seeing what's going to happen, and then we'll see who gets elected, if anyone does, and then we see probably a big market move after that. When Trump got in, we saw the markets rip to the upside, and they really never looked back. But now we're getting into the end of that cycle, and we're about to see what happens here with a new election going forward. So that's kind of where we stand. Really volatile times here in this market. We're at some critical turning points, and we'll see how things start to shake out going forward. Let's go and take a look over at the chart of bonds. Here is the ZB futures for bonds. Really been in this super tight range. Obviously, a rally, bull flag, rally, bull flag, rally, bull flag. They are this chart long term is pointing to still higher prices, but again, I don't see a whole lot of upside potential for bonds. I think we can go up to these highs or these highs and hit some of our targets, but I don't know how much higher bonds will actually go. There isn't the rates are so low, and with the forecast of the U.S. dollar losing value of like 1.5% per year, bonds giving you like just over 0.5%, you're on average per year you're going to be losing expected about 1% a year with inflation and everything like that. So overall, not looking good for bonds long term, but I do think we could see if the market flushes and sells off here, I think we're going to see a rally back up and see people quickly move into bonds as a safe haven play. And we are on board with that momentum there, that play there. Looking over at gold, up 0.25% this morning. Let's zoom in a little bit on gold. Gold holding at the 5-day. Today it's gapping higher. We'll see how things go. Overall, it is under the 20 and the 50-day moving average, and it's kind of working itself out. We have a downside target around 1810. If we look at this pattern here, we got a drop. We're having a bounce. This consolidation could very easily bring us down to this 1810 or 18 area, which is a significant breakout zone, and breakout zones should act as a support level going forward. So if the stock market does have another leg down, it's probably going to pull metals and miners down with it, which is why we had to protect ourselves and move on with our GDXJ position, because if this market does roll, they are going to get hit really hard, and we don't want to be left holding the bag if they drop dramatically. Let's take a look over at SI, which is the silver futures. Big drop to the downside. It hit our kind of critical short-term support level. It's bounced off those levels from 22 all the way up to 24 and change, and we'll see if it ends up flushing down. This is a fairly large bear flag that's forming, and it is pointing probably somewhere down to this $20 mark if it does start to continue to flush down. So this is the first support. It has acted as support, and we'll see if it ends up coming back down with the rest of the market if the market rolls over here. Looking at GDXJ, gold miners in general, even the large caps, again, they've bounced to the 5-day. We'll see how they trade today, but overall, still a downward momentum play. This is kind of the first kind of bounce back up to this area. It's getting up into resistance. The high of yesterday was right over here, through this wick low, through these lows, and then over here we had the price kind of gap and run away, but overall it is working itself into a little bit of a resistance zone. Big selling volume the last few sessions, and at this point it is still just a bounce. We are in a trend. We're making lower lows, we're making lower highs, and this could continue to flag out for a little while and potentially correct more. Looking at the US dollar, the dollar is down again today, which is probably why we're seeing metals pop a little bit. Yesterday the dollar was down quite a bit, almost 0.5%. Today it's down 0.2 or about 0.25%, so it'll be a little bit lower, but overall looks like it's carved out a bottom, and it is above the key moving averages. It's above the 20, the 50-day. It has broken the series of this what looks to be 3 surges to a low and then a bull flag. So this is kind of the first pause and pullback, which means we could very easily see the dollar continue to move higher. If fear creeps into this market, when people start selling and they get nervous, the dollar tends to rise. So this is kind of a bit of an early warning sign that we could see pressure in the markets, because it has turned to the upside and above the key moving averages, the opposite of what all the indexes have been doing. Looking over at natural gas, we got a huge gap on the charts, but this is due with contract rollovers, more or less. If we looked at UNG ETF, it is actually trading lower on the day. It's more or less rolled to probably these forward contracts already. Every day it rolls more and more, so that there isn't this big effect. So futures look like it's up massive, but the reality is it's more or less trading relatively flat and actually negative on the day for the ETF UNG. So a little tough when you look at the continuous futures contract and then the ETFs, and that's one of the problems with some of these commodities and the ETFs is they don't track exactly the same. You get these big kind of differences between the actual price of the future and the ETF. Looking at crude, down almost 0.5% this morning. It's kind of flagging out here. It had a breakdown. It had a knee-jerk reaction bounce. It's now kind of sandwiched between the 20 and the 50-day, kind of stuck at this, I think, a resistance zone. These are still inside bars, meaning the market is trading inside this red bar. And typically that is a bearish sign. You see the market have this big red bar, and then it kind of drifts and works its way back up. And then potentially when it gets to the upper end of this range, at the top of the body or the top of the wick, wherever this is where the sellers were originally, right in this area. When it gets back up there, the sellers step back in and can drive it right back down to the lower end of this box back over here. And then if it breaks below that box, then we're most likely going right back down to test this double bottom. So we'll see how this plays out going forward here. We are getting up to the 50-day as well. So it is starting to look a little more bearish as it gets up into this area. If we take a quick look over at Bitcoin, general trend here, it was in an uptrend where it rallied, consolidated, rallied, continuous bull flags, and then we had another rally up, which started to get a little toppy, and then we had a sharp crack to the downside with big volume. So it looks like this kind of upward bias stalled out, and now we've got what looks to be more of a bear flag forming here. We had a big red bar down, this bear flag, and if the market does crash and sell off, we're most likely going to see Bitcoin come down to that 9,000 rough area. That is a high volume area through here. It's more or less looks visually like a measured move, like that's where it should work itself down to. So overall, it looks like there's a negative bias on Bitcoin. And for a while there, it was moving intraday. If you were to overlay like the SP500 and Bitcoin on some of the high volatility days, they actually moved almost tick for tick in sync on some of those days. And as soon as, that's the problem with the financial system, as soon as you start to bring in an asset class like Bitcoin, once it gets into the financial system, it starts to move with the overall tide. Now, not all the time, but during high volatility sessions, you'll find they move almost identical intraday, although the overall picture changes. But during those one-off days here and there, when there's massive volatility, panic in the market, that is when we see Bitcoin and the stock market actually move in sync during the intraday sessions. The last two charts here, real quick here. Utilities continue to flatline. No one's really interested or nervous about the long-term picture. I do think this is building a base for a strong final squeeze higher. But overall, there isn't a lot of people moving into the defensive stocks. If we look at the VIX traded more or less flat or higher yesterday. It doesn't look like much here, but more or less it traded flat, closed slightly negative. Considering yesterday was a huge rally day in the markets, the VIX actually held its ground. It should have been collapsing, which it didn't. And that, to me, we've seen that happen a few times over here where the VIX actually started to move up with the stock market. And that's usually a bearish sign. That means there's big downside protection being put in place, like someone knows what's going to happen in the future. And then we see the market collapse. So there's a few things painting a really mixed picture here, but there is a negative bias at this point going forward. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.